Good morning and welcome to our 10 minutes at 10 or nearly 10 for everyone. So today we're going to talk about how to recover VAT on EU spends. So if you're trading with an EU supplier and you're VAT registered in the UK, you wouldn't normally be charged VAT if you zero rate the trade by providing your UK VAT number. So you shouldn't be charged any VAT in the first place. But there are instances where you may pay VAT on business expenditure, and Harry's going to tell you a little bit more about where those might occur and why.
So take, for example, you're traveling overseas. You may incur costs while you're out. So for items such as fuel or hiring a vehicle, and you might have expenditure relating to that means of transport. Now, this might include things such as road tolls, road user charges, general travel expenses, so taxi fares, public transport, accommodation, food, drink, restaurant services, subsistence, admissions to any fairs, any exhibitions you go to, and any expenditure on luxuries, amusements, and entertainment. And of course, there might be some other items you incur costs on. And as you may notice, all of these are items where you can't physically provide a VAT number to recover the EU VAT.
Yeah, they're more on direct spends, aren't they?
Exactly. So you can't really do much about it. Bosh, money spent, can't recover the VAT. Also, you might think. The one thing I will say is that you cannot reclaim VAT on business entertainment. So it works in much the way as client entertainment in the UK, you still can't claim on that VAT. So it's important to make sure you know what is client related and what is staff related.
And you can't claim for 50% of the car lease either. So it's the same principle as in the UK. So the basis of the claim, the reason we can do this, it's the 13th VAT Directive 86/560/EC in the UK. So UK businesses visiting other EC countries are able to claim VAT refunds on VAT incurred in those countries. Now, the rules are very similar as they are to the UK, in that it must be a spend that's incurred wholly, necessarily, and exclusively for the purpose of your business trade. So if it's a personal spend, you can't claim the VAT back. If there's a combination of personal and business use for that spend, you either have to prorata it or exclude it, depending on what that spend might be.
Then, important thing to make out here is that these claims for your VAT can be made online. Now, if you do, I'm assuming at this point in time, everyone will have, everyone will have an online VAT account, should have an online VAT account, assuming you've set up correctly. And if you do, then you'll be able to log on to your online government gateway, and you'll be able to add this as a service. Now, it's not there by default. You do have to request it. If you go to your VAT services and add another service, you'll get the option to add VAT EU refunds. So you might have to sign up to this separately if you don't already have it. And of course, you might have to wait for the authentication codes, etc., to get this all set up. So one thing to make a point of is if you are applying for a refund, the refund period in question must not exceed 1 calendar year. So it must be 1 calendar year, or it must be less than, or it cannot be less than 3 months, unless, of course, the period covered represents the remainder of a calendar year.
So not entirely different to UK quarterly and annual VAT returns, are they?
Not really, no.
It's just that the way it's expressed in the legislation is, makes it sound more complicated than it is.
Yeah. So what we've got to make sure here is that claims must be made by the 30th of September following the calendar year that the VAT is charged. And the claim is made in the currency of the member state.
So there are 2 more rules to consider. So the minimum claim level is €400 if a claim covers a period of 3 to 12 months. So it needs to be 3 to or less than 12 months. Or £50 a euro claim if the claim covers a whole year or the remainder of a year. So if, for example, you claimed in quarters 1, 2 and 3, and your 4th quarter was a €49 claim, you wouldn't be able to claim that because it didn't meet that €50 threshold. So if you claim quarterly, if your spends are likely to be that high, you do risk your quarterly thresholds not exceeding that €50 limit. So you could lose out. So if you're a relatively small spender, it's often better to reclaim annually and wait for the money than it is to do it quarterly and perhaps miss a quarter that you're not entitled to the recovery because you haven't met the minimum limits.
HMRC in this particular instance is essentially encouraging people and making it easier for people to apply for an annual claim rather than a quarterly.
Yeah,
unless you've got high volume. I think they're just making it so it's safer and easier to do an annual claim. Probably makes their admin work a little bit easier, so that's probably why they have those in place.
I suppose it also depends on the timing of the claim as well, doesn't it? Because even though you spend, if you're personally spending or your staff are personally spending something, say, in January, February, March, if they don't make their expenses claim until April, then that comes into the next VAT quarter. So there's a difference between cash and accrual in this basis. So there are ways of managing some of these minimum claim limits.
Then how do we actually go about how to account for the claims? Because obviously we've got the spends going out of the business, and from a bookkeeping perspective, you've got a bill and you're not entirely sure how to post it. Now, because of this VAT element, which you can't at that exact point in time recover, but you can later on.
But you mustn't let it go through your UK VAT return.
Exactly. So what we would need to do with this is I would personally recommend setting up 2 account codes for a single transaction, where you put essentially the net cost to the normal cost code you would apply with no VAT. And of course, this sits in your P&L as a standard cost. Now, it's important to put no VAT. It basically removes it from the VAT return, which is going to be submitted to HMRC. Now, for the second line item, we put the VAT cost by itself. And this one, once again, goes to a account code, which is going to be classed as no VAT. Once again, it shouldn't show on a VAT return. We don't want to be claiming this when we haven't done it via this reclaim method. Now, what we can do with this one is 2 options. You can either post it straight to the P&L and then recover it whenever you do your submission and you've got your worst case scenario, or you can post it to a balance sheet account where you're expecting it to be refunded.
I'd post it to a balance sheet account. So put your recoverable EU VAT in your balance sheet next to your UK VAT account. It's an asset because you're hoping to recover it eventually. And then if you get to a point where you don't meet the thresholds and you can't recover it, at that point, you write it back to your P&L and it becomes another cost of travel.
And that's not going to do a great deal of damage because if it's below the threshold, you've probably spent less than €50 anyway. So the reality is you're writing back a really tiny cost. So I would say balance sheet is sufficient. I would say SG is the best place to put it as well. And then you can check the record really easily.
And I suppose it depends on whether you're cash accounting or accrual accounting. We have some clients that like everything to show in the P&L. So then you would set up a P&L account code so that it shows the worst case scenario. And then when they recover it, it's the best case scenario because they've got the cash back and it's improved the P&L. For the majority of our clients that were accrual accounting and they're posting invoices and receipts that are paid off as the cash is paid down, then it would be something that you put in the balance sheet because it's an asset that you are hoping to recover later. So there is arguments for and against both methods, aren't there?
But the thing with this one is the VAT has to be essentially isolated manually when you do the process. So that part of it is a little bit trickier because you've got to make sure that you remember when it's an EU purchase, you've got to make sure it's also not client entertainment.
When you can't recover it.
Because remember, you can't claim any of that. So make sure you isolate it. 2 line items, net cost, gross cost, both no VAT, both separate account codes. And that's the best way to isolate it so that you can do your claim later on.
Now, you probably can do clever things in Xero and Excel and create different VAT codes for, different currencies and different member states. But what that would then do is put that VAT in the main VAT account, and it would confuse UK VAT with EU VAT, which is one of the reasons why we prefer to make a manual adjustment into a separate bank account or a separate account code and ring fence it rather than dump it into the UK VAT code. Keep the UK VAT clean so you can reconcile that against your VAT due at the end of your year and put your EU VAT into a separate EU account code. And in fact, if you've got multiple member states that you're claiming from, I would put those in different account codes because you're making different claims to recover each of those. And it works as a really nice control.
So important part to mention here is remember to keep all of your EU receipts.
Absolutely, because if you don't keep the receipt, it's a redundant exercise, isn't it?
So I probably should have said that right at the start. Keep your EU receipts if you're making any expenses abroad. Most people, generally speaking, I don't know why, but I find that most people are better at keeping receipts when they spend abroad. As strange as that sounds.
But not in the UK. Yeah, I think you're right.
I think it's because usually when they do it abroad, they're incurring the expense themselves, so they keep every single receipt.
Yeah, possibly.
I don't know why. It just seems they seem much more diligent from what I've seen.
So, but you can also you could use Receipt Bank or HubDoc or auto entry to keep those receipts. You could drop them into an Evernote account or keep them in notes. So they don't have to be paper receipts. They could even be electronic receipts. So long as you've kept a durable medium, which just means that something that's not going to be easily lost or deleted, then that's good enough for HMRC and for being able to reclaim the VAT. So there we go. That is our 10 minutes at 10 for everyone today on reclaiming VAT on EU spends. We hope that you found that helpful, and we'll see you again tomorrow. Speak to you soon. Bye. There we go.